Welcome to Gaming Fin, your channel for everything related to the gaming industry and the financial markets. My name is Mr. Orange, and today we have to talk about Team 17. I know this is a very niche video on a niche channel, of course, but we have to talk about this company because this company was losing on Friday at the London Stock Exchange minus 42.68%, minus 42, so almost minus 43% the stock is down. And my friends, you have the chart here. You have the chart here. And as always, I was putting, actually a long time ago already, some Fibonacci retracements in there. And I am amazed how those lines sometimes, how they're just working. I mean, this is the technical analysis, but sometimes it just works, and it's so weird that it works. So, guys, I mean, hedge funds are trading actually more to those technical lines. It's that's well known, and it's actually more those YouTube finance guys that tell you, oh no, you don't have to trade like this. You have to always look on the fundamentals, etc. Of course, you have to look also at the value and the fundamentals. But this is an example that all those lines make sense. Maybe this is just a British stock exchange. So, all right, guys, what happened? 42% down. In this video, we're going to check out what's the reason why it's down. I think this is what most people are interested in. Does it make sense now to buy the stocks? We are back in a 2018-19 low. So, and we were actually coming back from this low. And you see, yeah, we sold directly from the Fibonacci retracement at 350 pence, so £3.50. We were falling down to like 180 pence. So again, I mean, here you see all the Fibonacci retracements, and you see here also how we're fighting in the orange Fibonacci retracement. And then one moment we got over the green one, and then of course it was getting crazy. I mean, this is not a stock of 900 GBX, so this is not a stock for this, definitely not. So it's a small stock, so I'm invested in it, and I can also already tell you, my friends, I bought some more. I bought some more here because I think when I'm really at the low from 2018, it can go lower, of course, but this is actually really strong sign. So also buying in the falling knife, this is what I was doing here as well. So maybe this is going to be wrong, but I did it. So please, I'm not a financial advisor. I'm just a YouTuber. This is for information entertainment purposes only. So please don't buy anything. Probably you bought here at 900 and now you're selling. So just kidding, guys. Alrighty, so that's the chart. Let's go here to Team 17 on Google Finance. Here we get some more information. So employees was 438. I think they had some layoffs. Founded in 1990, so it's a bit old. It's one of the old school companies. So PE ratio was here 13/48. So I think this also needs to be adapted now, adjusted. And then we had a market cap of almost 300 million. So I guess that's also changed now. 2022, and all over the numbers, revenue was going up over the time. I like that. Net income was falling since 2020, but this is nothing special. You see with all the other gaming companies as well. So because you have to compare those gaming companies with other gaming companies, because you could just buy another gaming company that is maybe having a better run. For example, I'm not giving you an example, otherwise you're going to go immediately to buy this guy. So net profit margin is down from 21 to 22. And then it was actually not so bad from 2020 to 21 with almost minus 1%. And then it was minus 1.64% from 19 to 20. And from 18 to 19, it was 61% up. I mean, how crazy is this? This is actually really nice. So, and then, of course, we have to look at the games here. This is the Steam store page. So Team 17, those are the guys with games like the Moving Out, with the games with like Worms. Here, some new games are coming. Undead Inc. or Volcana, so Battle Royale, PvP, Simulation Strategy, then Autopsy Simulator, First Person Horror Sim, this looks fun, Classified Force 44. those games now, personally, I'm not so interested in those games. I have to tell you, I'm not so interested. But they have other games also in the past. They had like Blasphemous 2, Hell Let Loose, Stretch, Overcooked 2, Trepunk. So they always, from time to time, they have a very popular title. So then they make a lot of money on those games. But they have games that are not so popular. This happens, of course, to the best company. So then we have a new release. Maybe it's interesting to check this game out. So mostly positive. Unfortunately, only 76 people online on Steam. All-time peak was 1,100. So it's maybe not so successful, but yeah, I guess they expected more. It's a rhythm battle royale PvP title, so probably they expected more. But we have to see. Maybe this game also came out on mobile or from on other platforms. So who knows? And then here, new releases. So all of those are new releases. So overall, I like the approach. I like the indie games. So that's definitely cool. So yeah, home. So Team 70, Investors Relation. You can go there to check. Was it really true? Minus 43%. Yes, guys, it's true. And then so then we had like this announcement. So I would say we can go and read through this. So I guess you had almost of the information if you just wanted to know what's going on with the chart. So, but I'm going to read a little bit through this. So in conclusion, I mean, they simply didn't make us enough cash, enough money. That's obviously the reason. So Team 17, global games label creative partner, blah, blah, blah. So fiscal year 23 outlook. While the important trading periods of Black Friday and Christmas are not yet complete, management believes the group remains well positioned with strong traction across its new release and back catalog titles, and currently expects the fiscal year 23 revenues to be modestly ahead of current market expectation. So modestly ahead of current market expectation. This doesn't sound so bad. Despite this overall robust revenue performance, certain titles within the games label are not meeting internal expectations, resulting in a less favorable mix between higher margin owned IP titles and third-party titles, with higher royalty payments than anticipated. In addition, the group was too slow to address some project overspends and has faced some delays in implementing key cost initiatives at Team 17. These are now at advanced stages and will continue to bring benefits into next year's. This huge paragraph, you don't get so much information, but it's what's written there is negative. Management continues to be pleased with the performance of Astragon and Story Toys. However, since the first half results and in the light of post-COVID-19, management has re-evaluated the cost structure with Team 17 Games label to align with its core competencies as an indie game developer and publisher. In addition, it is also reviewing a number of titles both under development and already launched to assess the revenue potential in the current market environment, which is expected to result in impairment recognized in fiscal year 23. You see how we get totally different information in comparison to a Japanese company, in comparison, for example, to a Swedish company. So that's always interesting to see. So consequently, the group now expects to deliver full year adjusted EBITDA of at least £28.5 million, which includes non-cash impairments of up to 11.5 million. And fiscal year 24 outlook, the group has an exciting schedule of high quality new releases planned across the group in 24, while back catalog investments will continue to support revenue growth. Management will provide greater clarity on fiscal year 24 and the full year results, but currently expects to see an improved underlying trading performance. So it doesn't sound so bad, but I guess the expectation was for much higher. So all right, so therefore I also have some more information here. For example, I found some a chat, or let's say a forum here. Someone called Gary Dave 2 writes opinion. So Team 17 shares are down 40% today. Team 17 shares dropping this much is a bit of a surprise, to be honest, for the bad news had already been announced, or at least railed a month back when some someone third of the company was destined for the shop. We did, after all, get told about this. So Team 17 is poised to lay off 91 people. Now we go, how many are they? 438. That's a lot then. That's a lot, guys. So a third of the company, as part of its major restructuring program, Eurogamer can reveal. The publisher of Warm Stretch Hell Loose confirmed it was planning to make redundancies earlier this month after Eurogamer broke news that extensive cuts were being made to Team 17's QA department in favor of outsourcing work elsewhere. But the job losses go much further than those at risk in QA. Eurogamer understands, with staff across a wide range of departments affected, including those employed in Team 17's marketing, usability, customer service, IT, and HR teams. The things were bad was therefore obvious. Not that things have been going that well for some years now, but the long-term shareholders of Team 17 have had an unfortunate run in the last 3 years. Unfortunately, they have held through a 65% decline in the share price in that time, and the ride hasn't got any smoother in recent times over the last year, with the price 34% lower. Yeah, I mean, look at this guy. So, I mean, here you see where we are. So, people just got out probably here. Big investors got out here, and 22 was it's the mid-tier, the indie games market crash, as I always tell people. So it was not expected. I mean, it was not expected that we fall again to 180. I mean, everyone would have said, yeah, 250 is the low. So that's also where I bought some more around about here, and now I bought also a little bit more again. So, and then I found another interesting page. So it's Shares Magazine Shares Magazine UK. Video games developer Team 17 might need some assistance from one of the characters featured in its firefighter simulation title after revealing a profit warning on Friday. So Shares, that's the profit warning. So as I said before, it's not really clear. It's not really clearly written here, so they definitely have to work on the way how they talk to investors. But it's a small company, and they're kicking out a lot of people. So shares in the games publishers sank 40% on heavy volume, which means they are 57% below where they started the year and almost 80% below August 21st highs. The fall in the shares is roughly equivalent to the shortfall in expected full-year profit, according to Shore Capital's leisure analyst Katie Cousins. So what has gone wrong? The company said that despite an overall robust performance, certain games titles were not performing as well as expected, and the mix of own label to third-party games was less favorable. The latter are less profitable because Team 17 pays higher royalties. On top of that, the company acknowledges it was too slow to tackle some project overspends and initiate cost initiative at its Team 17 games label. Lastly, management is reviewing several titles both in development, so yeah, here, check this out. Both in development and already launched to assess their revenue potential in the current market environment. Team 17 is therefore taking a non-cash title impairment charge of 11.5 million for the current financial year to 31st December. That's it. I guess we have to explain what this means, because I mean, probably most people watching here are not financial experts, so as me, I'm not. A non-cash title impairment charge due to ChatGPT refers to a financial accounting entry that represents a reduction in the recorded value of an intangible asset, specifically a title on a company's balance sheet. The term non-cash indicates that this charge does not involve an actual outflow of cash. Instead, it reflects a decrease in the reported value of the asset. So, wow. Guys, so this is a decrease of the value of the assets that they have in their accounting of 11.5 million, and therefore the stock falls 40%. Then impairment charge. An impairment charge occurs when the carrying amount of an asset, in this case a title, exceeds its recoverable amount. All right, so the recoverable amount is the higher of an asset's fair value less cost to sell. Okay, that's getting complicated. So in practical terms, ChatGPT says a company might recognize a non-cash title impairment charge if, for example, the economic conditions or market trends have changed in a way that reduces the value of the intangible asset. So the overall market situation changed now for Team 17, and now therefore they have to make this accounting change. This accounting adjustment reflects the company's acknowledgement that the asset is no longer worth its previously recorded value on the balance sheet. That's it. So that's it. That's like the big downgrade. So what are the financial implications? Team 17 now expects to deliver full year EBITDA, earnings before interest, of at least 28.5 million. So Katie Cousins notes this is 40% below her last published EBITDA estimate of 48 million. Guys, now we see where those 40% come from. Those 40% come from what Katie Cousins was estimating. So it's 40% below what she was estimating. So probably this is one of the most important analyst of the stock, and now immediately it drops 40%. So that's the reason. We plan to publish an updated model shortly following this morning's disappointing update, but would expect our fiscal year 24 full revenue forecast to remain at circa 150 million, which implies circa 2% year-on-year growth. 150 million. Let's go back. So last year 137 million, now 150 million. So I don't know, sounds not too bad, guys. However, we plan to rebase our margin expectations as the group sees impacts from being a bigger group with higher amortization charges. We now see margins likely to be around circa 30% versus 34% forecast previously. Despite the profit miss and 24 downgrade, Cousin remains constructive on Team 17 and has maintained her buy recommendation on the stock. So this is a financial advisor. I'm not a financial advisor. Cousins explained, we value the diversified model, which is profitable and supported by cash, as well as the strong brand awareness with consumers. I would say they have a strong brand. I would say this too. Therefore, and although we likely be reduced with our downgrades, we still expect to see value beyond our fair value versus the current share price. So, that's interesting. Okay, yeah, that's what I'm just read to you. So, overall minus 40% due to the numbers. So, stock really drops minus 40%. And then the analyst still says, yeah, well, outperformance by blah, blah, blah. So, I mean, look at where we are, guys. So if you want to buy the stock now because you say, hey, it's not all so bad, you say. And from a mere trading perspective, maybe you see a little rebounds. Everything is possible, guys. But I think we might see like 150, 140. So I'm not saying this on any valuations. I'm just saying this out of experience. So mostly we drop a little bit more. But if it's going to be like this analyst says, then there is a possibility that the stock might find a bottom and then we can trade up again. Because hey, they have a nice back catalog. They have a nice back catalog of great games. They still make great games. Sure, some people had to go. QA, of course. It's the first one that always leave. But also in the upcoming releases, they still have some games. Let's go to, for example, to this game just as an example. So what is this game? So a lot of strategy games. So, but I would say I'm staying invested, and I would also say I'm not regretting that I was buying some more. So for me, all is good. And yeah, always invest very, very small and always small amounts in comparison to your overall stock market portfolio. That's important. And then, of course, be diversified, my friend. So that's the most important thing. Because just imagine Team 70 goes bankrupt, or just imagine Team 70 gets falls now to 100. Let's say it falls to 100, and then someone comes. Let's call the company Microsoft. This is just speculation here. Microsoft comes and says, yeah, I'm going to buy it now for 130. So then Microsoft buys Team 70 for 130, but you were investing at, let's say, at 200. That's your average. Then you are going to lose, 70 points on then Team 17 on your investment in general. So always keep this in mind. So this is the risk that you can have if you invest. All right, if you enjoyed this video, comment, like, and subscribe. So a little bit longer video. I had to go through some sort of information. I know I could have done this shorter, but hey, I'm also learning a lot when I do make those videos for you and research the stocks for you. Very niche, very niche. Probably no one watched this video. If you did so, then please comment. I wanna see that you watched it. Okay, bye bye.